The current stock price for SMX, Security Matters PLC, is exactly 176.03 USD, showing a significant intraday jump of $19.89 or 12.74%. As we stand here on Sunday, December 21, 2025, the market is currently closed, and this figure represents the final valuation from the most recent active session on Friday. While many retail investors see a price tag of $176 and assume they are looking at a blue-chip tech titan, the reality is far more complex and involves a series of aggressive share consolidations that have fundamentally altered the optics of this ticker. The insight most people are missing right now isn't just about the double-digit percentage gains, it's about the fact that SMX has basically engineered a high-price profile through multiple reverse splits to stay compliant with listing requirements while simultaneously catching a massive tailwind from federal cannabis policy shifts. You might hear the general chatter suggesting that this is just another speculative pump and dump in the microcap space, but if you look at the institutional movement and the specific timing of President Trump's executive order regarding marijuana rescheduling, a different picture emerges. The market expectation was that cannabis companies would be the only ones to benefit from moving the substance from Schedule 1 to Schedule 3. The reality is that federal oversight introduces a level of compliance and chain of custody requirements that the current state-level systems simply aren't built to handle. SMX isn't a cannabis producer. It provides the molecular-level verification technology that makes federal-grade traceability possible. This creates a curiosity loop. Is the market finally pricing SMX as a pick-and-shovel play for a federally regulated industry, or is this $176 price point a fragile illusion built on a shrinking share count? Trading volumes for SMX have been erratic, but they peaked during the mid-December surge where we saw the stock react violently to news of successful industrial pilots in the cotton and textile industries. We are seeing institutional activity from firms like 2 Sigma Securities and UBS Group, though their positions remain relatively small compared to the broader float. The recent momentum is being driven by a narrative shift where the company is being framed as the Google of materials. This is an authoritative angle because it suggests that instead of just tracking a box with a barcode, the company is indexing the physical matter inside. When you look at your individual brokerage or check your holdings on the Robinhood app, you're seeing a price that has been through several reverse splits, one as recently as November 2025 at an 8-to-1 ratio, which explains why a stock that was trading for pennies not long ago now sits at triple digits. Sector momentum in the broader technology and industrial machinery space has helped, but SMX is operating in a vacuum of its own making. While big names like Apple stock or Nvidia stock move based on global consumer demand and AI infrastructure spending, SMX moves on the proof economy. Macroeconomic pressures, particularly the tightening of ESG reporting standards and the European Digital Product Passport mandates, are forcing companies to find ways to prove their recycled content claims. This is where the tension between expectation and reality gets interesting. Investors expect a company with a $176 stock price to have billions in revenue and stable earnings. The reality, however, is that SMX reported a net loss of over $11 million in its most recent quarterly filing and has had to rely on a $111.5 million equity purchase agreement to keep the lights on and fund its expansion. If you are using platforms like Interactive Brokers or Fidelity Investments to manage your portfolio, you've likely noticed that the volatility in SMX is far higher than what you'd see in a standard Fidelity ETF or one of the common Fidelity mutual funds. This is because the actual number of shares outstanding was reduced to approximately 1 million after the recent consolidations. This tiny float means that even a small amount of buying pressure from a few retail traders on the Robinhood trading platform can send the price swinging by 20 or 30% in a single afternoon. It is a high-stakes environment where the intelligent portfolio approach, like what you might find with Schwab Intelligent Portfolios, might struggle to justify the risk-reward profile of such a concentrated low-float position. Let's talk about what this company actually does to justify the attention it's getting on investing sites. SMX uses a chemical-based hidden barcode that can be baked into any solid, liquid, or gas. This isn't a sticker or a tag that can be ripped off. If you are a high-end clothing brand using cotton, SMX can mark the raw fiber. Even after that fiber is spun, dyed, woven into a shirt, sold, worn, and eventually sent to a recycling center, the molecular marker remains. A specialized reader can scan that shirt and confirm exactly where the cotton came from. This is the reality that is starting to exceed the market's expectation of simple supply chain software. In a world where greenwashing is becoming a legal liability, having a scientific way to prove a product is truly recycled is becoming a necessity rather than a luxury. This technology has already been validated in the gold industry through their True Gold initiative and in the plastic recycling sector where they are working with global brands to meet 21 CFR food contact regulations. When you look for investment help or explore self-investing options, you have to weigh this technological potential against the financial history of the firm. Past performance has been brutal for long-term holders. Before the string of reverse splits in 2025, the stock had lost nearly 99% of its value from its 5-year highs. It's a classic case of a company with a potentially world-changing product, but a balance sheet that has been under extreme duress. Comment below how many shares of SMX stock you currently hold, or if you think the cannabis rescheduling will be the permanent catalyst this company needs to stay above the $100 mark. The future outlook for SMX hinges on whether they can convert these industrial pilots into recurring, high-margin revenue. We are entering a phase where the market will no longer be satisfied with press releases about successful trials. Investors using SoFi Invest or checking their Fidelity brokerage accounts will want to see those trials turn into long-term contracts. The $111.5 million capital infusion gives them a runway into 2026, but the risk of further dilution remains if they can't achieve self-sustaining cash flow soon. The opportunity here is the massive identity gap in global trade, the fact that we trade trillions of dollars in goods each year based on pieces of paper that can be easily forged. If SMX becomes the standard for material identity, the current market cap will look like a rounding error. However, if they fail to scale, the low float volatility that fueled this run will work just as aggressively on the way down. When you are looking to invest online or researching investing sites for the next big move, it's easy to get caught up in the 12% daily gains. But the serious investor looks at the institutional long-only positions and the VGM scores. Right now, the technicals for SMX show a strong buy according to some momentum indicators, but the fundamental reality is still one of a company in a high-growth, high-burn phase. The recent executive order on marijuana is a perfect example of a catalyst that wasn't on many people's radars. It transformed the perception of SMX from a niche recycling play into a critical infrastructure provider for a multi-billion-dollar domestic industry that is about to face rigorous federal audits. This is the kind of development that forces people to rethink their entire thesis. The Robinhood app and other mobile platforms have made it easier than ever to jump into these momentum plays, but whether you're using Fidelity Wealth Management or doing it yourself, the core principle remains: expectation versus reality. The market expects that federal regulation will create a massive barrier to entry that only verified players can cross. The reality will depend on whether SMX can actually implement its molecular marking at scale across thousands of grow operations and processing facilities. If they can do this, the Google of Materials label might actually stick. If they fail, this current price spike will likely be remembered as just another chapter in a long history of volatility. To summarize the central insights we've covered, the $176.03 USD price point for SMX is a product of both genuine regulatory tailwinds and extreme share consolidation. The contrast between the expectation of a stable, high-priced stock and the reality of a speculative, low-float microcap is where the most risk and opportunity live. The company has moved beyond simple plastic tracking and is now positioning itself as a central pillar for the gold, textile, and cannabis industries. While the financials still show significant losses, the new capital agreement and the shift in federal policy have created a curiosity loop that is keeping institutional and retail eyes glued to the ticker. The depth of their technology is real, but the authority of their market position is still being earned one contract at a time. Whether you use SoFi stocks, Robinhood crypto, or a traditional Fidelity IRA, watching how SMX handles this transition from story stock to infrastructure stock will be one of the most interesting narratives to follow as we head into the new year. The authority of the analysis comes from understanding that the $176 price point isn't a sign of safety, but a sign of a new beginning for a company that has survived to the brink of delisting through pure engineering. It is professional, it is direct, and it